Welcome to the channel.
The IRS telling me that I owed them more money than I had. At that point in time, I had to humble myself. Finally picked up the phone, called my mom. My mom had owned a tax and accounting firm, and I asked her what I did wrong, and she told me you could have done this, and that.
What's the net worth of the average client?
Tax planning makes sense right over 300K. That's when you have enough liquidity to be able to invest in tax reduction strategies.
What do you see that people get audited the most for?
I have seen some of the craziest things on some of these other expense items. Massages for my team.
People see corporations pay 0% tax, and they're like, how?
You're shifting income from one entity to another entity that's filing tax returns on a completely different fiscal year end.
Who benefits the most from the tax code and why?
The government has created a bunch of incentives inside of the tax code because they know that they can't afford to provide affordable housing for everybody. They know that they can't get everyone a job and stimulus checks. So they're partnering with business owners. You can be an earner in this government, but they're going to penalize you for just being an earner. Debt is a good thing. It's a tool. It's something that I can use to my advantage. I understand that there's certain wealth teachers that teach you to be 100% debt free. However, the tax code's not written like that. IRC 181 allows for you to write off the cost of the production of a movie film. These taxpayers have to spend 100 hours watching other movie films in order to qualify as an active participant in the movie space.
All right, guys, welcome back. EYL, we are here with a special guest, Carlton Dennis.
Yeah.
Came from California.
Yeah.
And specializes in tax strategies for high-end wealthy clients.
Yeah.
Is that correct?
Yes, that's correct.
Okay. So this is a conversation that we can never, have enough of, especially around this time. It's tax time.
Mm-hmm.
And I feel like no matter how much we talk about the tax code, most people don't have any idea about it, and people still make mistakes. We just talked about some entertainers that made some big mistakes when it comes to taxes. So
Yes.
Learning about the tax code, learning about best ways to, really shelter, really maximize deductions, really, make the most out of the code, because it's very complex. I think it's something that is always educational to teach people on. So, this episode, we're going to go over that, and we're going to go over your journey and just get a lot of gems. But first and foremost, thank you for joining us.
Yeah, absolutely. I appreciate you guys having me on. Excited to talk tax today. I want to be able to help a lot of people kind of crack the code today, if you will.
Yeah, I think it's going to be an interesting conversation. One that obviously the audience is going to learn from, but we're going to learn from too. Yeah. Because one thing about the tax code, especially when new administrations come in, it always changes.
Yes.
Right.
Yes,
things get taken out, things get added, some things get put back. So I got a bunch of stuff.
Yeah.
Yeah, because we're trying to make sure that we can keep as much as possible.
Without a doubt. Without a doubt. I love that. I love that.
So let's get into it. How did you even get to this point? Let's start there. How did you get into the world of taxes? How did you start working with clients?
Yeah.
Explain your whole background from start to where you are now.
Yeah, so I actually don't have the traditional background that most CPAs or tax professionals have. I didn't go to school for accounting. I went to school for kinesiology. I thought I was going to go to the NFL. That whole story didn't end up happening. And right when I graduated college, I got a W-2 job working for this company called Gallo Wine Company, where I was selling wine and liquor. And I also started my personal training business. I did not realize that when you are a 1099 contractor, that you have to report all your 1099 income. And if you don't, the IRS will report it for you. And so I got a letter in the mail from the IRS telling me that I owed them more money than I had. And at that point in time, I had to humble myself. Finally picked up the phone, called my mom. My mom had owned a tax and accounting firm for over 30 years. She was literally called America's Tax Lady. And I asked her what I did wrong. And she told me you could have done this, and that to have prevented it. I moved out of Hollywood, California, moved back home with the parents, joined the family business. And within 6 months, I realized making personal training programs was never going to equate to the revenue she was receiving on selling tax plans and helping people save money. And I decided to go all in on tax and got my enrolled agent's license and got on YouTube during COVID and to 2020 and started sharing tax information with the world.
So your family you have a firm?
Yeah, my family has a firm. Okay. That's correct. Yeah.
You still work with them now?
Oh, yeah, absolutely. Yeah. My mom has her firm and then I have my firm too.
That's great. Most times we hear stories and people try not to stay in the family business.
Yeah.
What you said, you had to humble yourself.
Yes.
Right? Like growing up, obviously knowing that your parents did that line of work, were you saying I'm going to do something completely different? I don't want to do that.
100%.
It was like just being stubborn about it.
Yeah, 100%. I was super stubborn. I wanted to be the football guy, the limelight guy. Athletics was always the thing that came easy to me. And when I saw the writing on the wall that I wasn't going to go to the NFL, I needed to pivot into something else. So I immediately went to career fair, found the first job that liked me, which was, Gallo Wine Company, fell into that. But then I picked up personal training right at the exact same time. And I called myself a celebrity fitness trainer, moved to Hollywood, California, and started getting clients just by posting on Instagram and social media. At that time, not too many people were really using Instagram like that for videos yet. And so I was like putting out a bunch of videos to get people attracted to my business.
So at what point do you like hit your stride and say, I'm all in on this taxes thing? I'm done with, trying to be a personal trainer. And
yeah.
This is my chosen path.
Yeah, it happened actually within the first month of working in my mother's firm. So I convinced my mom, I'm going to go 100% commission based. So I don't want a salary. I'll just come in on sales and I'll be 100% commission based. Well, the first 4 weeks, I didn't make any money because I didn't understand anything about taxes. I was just calling people and didn't know what to say. She came into my office one day and said, hey, if you can't sell a tax plan within the next 4 weeks, I am going to fire you. You have plenty of information here. So get to work. So what I did that day is I went to Target and I bought a recorder and I slid this black recorder, it was $18, underneath her desk. And for 8 hours, it recorded everything. I took that recording, sent it off to rev.com. Rev.com sent me back a transcript within 48 hours. Now I had a transcript of how my mother communicated tax.
Did she know this?
She knew this.
Okay.
Now, when I got the transcript, the first couple of calls that she has was just regular taxpayers that are looking for tax returns. Very simple conversations, $1,000 return here, $1,000 return there. But then in the middle of the calls is when she got to the tax planning. She had a husband and wife come in. They were a real estate agent and a firefighter. And instead of looking for tax preparation services, they were looking for ways to reduce their tax. They were making about $500,000 a year. And my mom elaborately explained in the writing how a tax plan works, how you can leverage the tax code to the fullest extent versus just filing a tax return. By the way, the fee is $25,000. And on the spot, they signed. The conversation was only 25 minutes. I had been writing workout programs for $250 for a month, trying to get up to 100 clients. She made $25,000 in 30 minutes. That showed me everything that I needed to know when it came to providing value to people.
So the $25,000 was, when you say a tax plan, just for the audience,
yeah,
this is not just like a regular, like you do somebody taxes. Like you're putting together a strategic plan for wealthy people to kind of guide them on the do's and don'ts, what they should do. Like explain what the tax plan actually is.
Yeah, so the tax plan works like this. Someone is going to take your income for the year, project out your income for the full 12 months, and figure out what your expenses are so they know what your net profit is. That is going to allow for us to be able to know how much taxes are you going to pay federally, on the state side, even Social Security and Medicare. But that's going to be the number we want to change. The next thing to do is to figure out what your goals are. Maybe you want to become a real estate investor. Maybe you want to own assets. Maybe you want to focus on retirement. So you spend some time with the customer to kind of understand what their goals are. And then you match it up with the strategies that exist in the tax code. This is where the fun starts to happen because some people are going into investments for the first time. Some people are setting up entities or shifting income to children for the very first time. And now they're able to reduce their tax bill before the end of the year, giving them far less stress when they go to file their tax returns with their CPA come April of the following year.
And what's the net worth of the average client?
I would say tax planning makes sense right over $300K because that's when you're at the point where you have enough liquidity.
$300K a year.
$300K a year in income. That's when you have enough liquidity to be able to invest in tax reduction strategies. Most strategies that are actually going to save you a lot of money do require you to invest money. And that's the secret that the wealthy have been utilizing for years when it comes to the tax code.
In terms of pricing, because I know somebody's going to hear that and say, oh my gosh, $25,000. That's based on obviously 30 years of work, but is that also a strategy, right? Because could that be written off in terms of tax expenses, like actually having somebody that builds a plan? Like sometimes if you hire an instructor, like that can be a part of your plan. Is that the pricing, is it incorporated into the strategy as well?
Yeah, it is, because legal and professional services are 100% tax deductible. So hiring a tax professional is a tax write-off for you. So before they've even done anything, at a 37% marginal tax bracket, you might have already saved $5,000, for example.
See, once I heard the price, I'm like, oh no, they wrote that off.
Yeah, 100%. You're going to place that underneath the business as a tax deduction. Yeah, absolutely.
So let's get into this. Let's get into taxes. So, all right. So the world of taxes, I always say, like, the tax code wasn't meant for employees. It was meant for investors and entrepreneurs.
Correct.
Right. Because that's the people that benefit the most.
Yes, they do.
Right. So kind of explain it from your vantage point. who benefits the most from the tax code and why?
Yeah. Business owners and investors benefit from the tax code most because they're doing what the government can't do the most. The government has created a bunch of incentives inside of the tax code because they know that they can't afford to provide affordable housing for everybody. They know that they can't get everyone a job and stimulus checks. So they're partnering with business owners and allowing business owners to take ordinary necessary expenses because they know business owners are going to grow and eventually hire employees and be able to get jobs. And that's what we want in this society. We want people to have jobs. We also want energy as well. And investors invest in energy, oil and gas, solar, and most importantly, affordable housing. If you're a rental real estate investor, you're probably taking on a loan. But instead of you paying that loan, you've arbitraged the debt and you had someone else pay down the loan, AKA your tenant. So you're partnering with the banks in order to buy an asset to provide affordable housing. That is why the tax code is incentivized for real estate investors and business owners.
Perfectly put. We talked to a lot of people that invest for the first time. A lot of people have made money inside the stock market over the past 3 years. One of the things that they don't realize is there's a capital gains tax.
Yes.
Can you break down capital gains to the average investor, the beginning investor, so they can understand it and prepare themselves, right? A lot of people are like, hey, I made a lot of money.
Yes.
End of the year comes like, hey,
yeah.
Yeah, you forgot about that part?
Yeah, capital gains is tax treatment on investment income. If you held an asset for more than 365 days, you get favorable tax treatment, 0, 15, or 20%. And really, if you're single, you would have to make over $450,000 to even get into the 20% bracket. So you're really at 0 and 15% for most of the time when you have capital gains that are long-term capital gains. If you sell an asset like a stock, Apple stock or Google stock, or an asset less than 365 days, this is when you have short-term capital gains. Short-term capital gains are ordinary tax rates. They start off at 0%. They go all the way up to 37%.
If you like this, subscribe and drop a comment.